It has been a big week in tech. We've been talking about it all morning long, from the Section 230 hearing to a myriad of earnings from Amazon, Facebook, Twitter, Apple. Here to break it all down for us is Dan Ives of Wedbush. Dan, good to see you. Went through your note, which was quite the thesis this morning, lots to cover. I want to start with Apple. They beat. I mean, they did beat on the top and bottom line for the most part. iPhone sales, we know, were weak, but one would expect that given the fact that the iPhone 12 was coming around the corner. Do you believe we're still in a super cycle here?
Yeah, I mean, I think the super cycle is just starting. I mean, that's why from an investor perspective, this quarter really takes a back seat to what's going to be the super cycle hitting starting the holiday season. We think you could be looking at $100 billion type quarter. And that's why, a knee jerk, I think a bit of an overreaction in terms of the iPhone miss. It's a pause, especially in China, ahead of what I believe is a super cycle. And I can tell you from a check perspective, pre-orders up more than 2x its predecessor. So we'd be buying on this type of weakness.
Dan, curious on Amazon. So much of the focus this morning on Amazon is the $4 billion in related COVID expenses. I get it's a big number. Investors have to focus on that. But to me, the real story is the margin pressure in Amazon Web Services and the slowing growth. You cover Microsoft. Is Microsoft taking share from Amazon, or is this more a reflection of, hey, it's challenging out there from an economic standpoint?
Yeah, you hit the nail on the head. I think that continues to be a bit of a concern. I mean, if you look, I think you're starting to see some share shifts toward Microsoft and Azure, because now you're really getting into core enterprise workloads where I think they're starting to gain share. Now, look, this is a big enough ocean for more than two boats. You're even seeing GCP, Google gain traction there. But I do think they got to put more expenses, more sales and marketing, more R&D into those initiatives. But ultimately, take a step back. I mean, we are in really what's a golden period for cloud computing. And that continues to be really a two-horse race between AWS as well as Azure. And I think the Amazon numbers priced to perfection in terms of expecting a quarter. But even when you look at the guidance, I think that's an SBS sandbag special.
Dan, I want to get your thoughts on Netflix quick here, because they didn't come out with earnings. What they came out with was an announcement saying they're going to raise their subscriber plans. We're going to have to be paying a little bit more for our Netflix, still less than HBO streaming service, might we add, but raise it nonetheless. Is this going to be a disaster? Are people going to leave the platform, or will they pay up?
If they're in a position of strength and they know when they test prices, especially in this COVID pandemic, it's something they can increase prices more if they wanted to. And that's why it all comes down to the king of content. And if you look at churn, it's really been impressive what they've been able to do. And despite competitors from all angles, Disney, Apple, as well as many others, coming across the globe. And I think Netflix just continues to be in a position of strength there. And them putting together that price increase, I think it's something investors want to see, just given they know that they could do that. And that's going to be just another sort of added talent to the top line.
I want to ask quick, we had talked in the past about maybe Apple buying up one of the movie studios to help it beef up its content as it now fights in this streaming battle. Do you think that Apple might do that with the $190 billion it's sitting on right now?
Yeah, I mean, that continues to be the missing piece, because they've essentially built a castle, a mansion with no furniture in terms of content. And that's really going to be the driver. I would be shocked if they do not buy a studio over the next 3-6 months. We've talked Lionsgate, Sony, MGM, A24, the ones that would make sense. Because from a content perspective, that's what's missing for Apple on the streaming side. And that's why I think investors, that's what they want to see them do. If they do that, stock's up on that move.
Dan, California has Prop 22 on the ballot. I've been following Lyft CFO Brian Roberts on Twitter the past few days, and he's been tweeting up a storm. I should be really running the company. If this goes against Uber and Lyft, how detrimental could it be to their financials, but also the stock price?
It would be a massive gut punch, really a business model change, especially when you look at Lyft. 16% of revs comes from California. And that's why when you look at Uber, Lyft, the gig economy, I mean, so much is riding on Prop 22, because it's not just California. It's potentially Pandora's box and what that could do to other cities, states, and even countries following. London, I think, also watching this closely. I view it as right now it's a contained risk because I do think they pivot on the business models depending on the outcome next week. I do think Lyft's more exposed than Uber because Uber, when you take it down to global exposure, 3 to 4% of revenues. But this is a fork in the road situation. It continues to be a head scratcher in terms of AB5, but I think a lot riding going into next week on Prop 22. That's why Brian and Lyft are so focused on this. This is an existential business model threat.
Dan, what about Alphabet's Google? Alphabet is one of the only big tech stocks actually higher this morning. They also had blowout earnings, but they're coming under a lot of pressure on the Hill with this antitrust case now against them. Do you think that's going to impact the business going forward, at least in the short term?
Yeah, and they've had, as opposed to other FANG names, they've actually had headwinds on digital advertising. Look like it turned the corner. That was huge relief for the street. But ultimately, from a DOJ and antitrust, I mean, that's the big worry going into next year. Remember, a blue wave, I think, just adds to some of the threats and theme from a breakup perspective. They and Facebook continue to be front and center. And I think very closely watching the DOJ suit because this is not a light matter. And I think this comes down to the Beltway versus big tech battle, which is going to be a big theme into the next year with Alphabet front and center.
Are you surprised then that the stock is being bid up like it is today?
It's being bid up because it's viewed right now antitrust as a contained risk. If you look at those numbers, those were even better than whisper expectations. Turn the corner in digital advertising, which is key because it shows maybe some business model changes into some sort of semi-normal. And you compare that with the likes of Amazon and Apple, which of course didn't meet expectations with the street looking for perfection.
All right, Dan Ives of Wedbush. Thanks as always. Good to see you.